Testing. All right. Hello, traders. What's going on? Looks like the volume's working. Jamie Saettele here. Happy Wednesday, and welcome to the SB Midweek Strategy webinar. So let's start with the dollar. Been on quite a tear, obviously. And what we're going to look at here is two channels. The first, as I start this webinar, actually, why don't I start with this chart, the Euro chart. Oops. The Euro chart first, real quick, just before I go into the dollar. The Euro, we just hit a really big level. We're fairly close to a big level. So let's see here. All right. You can see that we're hanging around the January low. You have two equal legs down from the May high. It would be at 106.60. We just made a low at 106.66. 666. So we just made a low at 106.66, and you're seeing obviously the euro 50 pips off the low here. The trend line from last year, the lows from last year is a little lower, but this is a good spot, I would say, for us to start to, tick higher. So just pointing that out real quickly, that we are coming off of an area, 6 pips above a measured level. So just want to point that out quickly before I go into the dollar index chart. So the dollar index chart, what you've got, and here's a lesson in two original slopes. You have this trend line, okay, and this was just trend line, the channel. Something happened yesterday. It was interesting. So you broke out of this on Monday. The low yesterday was essentially at that channel line, okay? So that to me kind of warns that you're going into, what we call, I guess, a blowout mode. So what you would watch for then would be support right here. Basically, where you had it yesterday. So it's, 99.50, 99.60, okay? If we equate that area, can wall, what's going on, my man? We will get to crude here in a moment and go through some of the remarks that I wanted to make on the dollar and some other stuff. 99.40, 99.60. So that is, to me, kind of the area that you would watch for, a pullback in the dollar to provide some sort of a support. Now, if I scroll out here, go to a weekly chart, trend line 2008, 2011. Parallels from that. The entire rally, and I tweeted this chart out yesterday, kind of warning that you could see, eventually we could get up to 101.50 or so. So we did tick to a new, excuse me, the hiccups. We did tick to a new high here today, a new 13-year high. We went just above the high from November of last year. And we've got, or was it December? I think it's December. This chart shows the weekly is the first day of the week. So I think it was actually December, but we've got 101.50, kind of on watch or on alert, if you will, with where maybe the dollar ends up topping, on a longer term basis. So that gives you essentially 99.50, 99.60 support dollar index, 101.50 or so resistance dollar index. So that is really the theme here, I think, for probably the next few weeks, maybe the next few days, depending on how quickly the market moves. But I would have those levels marked down, you know, on a piece of paper or wherever. Okay, so I have those marked down. All right, so then obviously moving on to the euro, which we just kind of took a real quick look at. But the euro, that daily chart, big spot here. And if we kind of equate the euro levels to the dollar index levels, you probably end up with, again, it's pretty much where you were on Tuesday, right? So you've got the lows back here from last March at 108.20, and we quite nearly traded up into 108.20 on Tuesday. That's essentially, you know, the slope line here. That's essentially where you would expect to see, you know, resistance if indeed you actually have a breakaway gap here for a bit. Okay, so 108.20. At the same time, 106.60, 106.40 is the trend line. That's, you know, if you get down there before you get to 108.20, that's your area for a bounce. Pound dollar, cable we looked at in one of the updates last week, and it was, you know, an interesting call, I think, to potentially, you know, maybe look for something of a near-term peak in cable, because we had, you know, a lot of people were getting quite positive on cable. But again, just a simple trend line here, folks, with the British pound. So the daily chart, and we had the channel, right, all the way back to, I believe it was this one. So 2014, and then we had that there, right? So that was the former, you know, trend line resistance, or trend line support, pardon me, channel support, and then we rammed into it on Friday. And there's another case of your, you know, your Friday high, right? You don't want to chase the Friday high. Old saying, I always say it, but never buy a Friday high. It's the same for a sell, right? You don't want to necessarily chase a new move, a new trend, you know, short-term trend high in a market. So what we've got then is prospects of a pullback, which we have seen, and then last night went into a little bit deeper on, you know, the short-term chart, suggesting we might have a wave A working higher and a wave B, which I do think, you know, is what's happening right now. So I'd be looking from here up into 25.60 or so, right? And 25.60 is the 618. It's a real nice level, 618, and the weekly opening price. You've got the high over here too, okay, from November 4th at 25.57. So there's a lot up there, you know, to maybe send us back for another drop. So with British pounds going up to 25.60, then maybe look for us to roll back over and get down into bigger support down near 22.70. And you can really see it, I think, cleaner, as with anything. You see it so clean on a daily chart. So daily chart, just draw this trend line, your kind of original trend line, if you will, off the lows, and then the old resistance line. The intersection would be today. Don't think we're going to get there today, needless to say. But yeah, this area 22.35, 22.60 or so, which is the high back here, 22.68 from 10.27. So there's really good levels to trade in the British pound. Okay, looking higher, and then could see a dip in your A, B, C. So to complete that three-wave drop. Just going to see if let's say if we were, for argument's sake, let's see if we did get a bump up into 25.60 and rolled over, you would have two equal legs at 22.75. So Eileen saying, where are you looking for? So this is, again, it's a matter of style, of time frame. So, this is the support line here that you can see we've been holding all morning. So you could look higher from here, okay? And you could look up into 25.60. And if you got up to 25.60, you'd be looking to roll over. So ultimately, Eileen, the big long entries for the British pound would be on completion of a three-wave drop from last Friday's high, which I think could put you down near this 22.70 area, okay? That's, that would be the ideal spot at least. But, shorter term, there's 100 pips of upside from where we are sitting right now, which is 24.60. And, it gets you again to 25.60, okay? So if you wanted to get real nitty gritty on this, you'd have to bring in a real short-term chart. And let's see. Where's the 4-hour? So 4-hour reversal bar yesterday. Yesterday we had a 4-hour reversal bar right at this time, I believe, and that's 24.40. Okay, so if you were going to be real short term and trade into the long side for this 100 pips on the upside, I would look for 24.40 support with a stop under 24, the low today, which is 24.08. Okay. And that is a short-term look at the British pound. You've got the dollar index, right, up where it is, 13-year highs. The British pound obviously led on the way down, right? It was plunging, culminating with the October 7th flash crash, so to speak. But cable's been holding up relatively well lately. So we may be in for, cable to maybe lead on the way up a little bit. So I don't think it's completely out of the question crazy to maybe look on the long side for cable for swing setups, right? Down into the 22.70 region. Okay, so let's go to some of these other dollar crosses. I have written notes, as I always do. Aussie dollar, I've written on my notes, FU. I'm so tired of looking at this thing. After all the, false breakouts on the upside, slammed lower, put on a short yesterday. It didn't do anything. So I said, well, forget it. I'm getting out. And then it is, one of the weakest currencies today. So Aussie, look, I don't think there is much reason to think that it doesn't get to 73.80 at this point. I mean, yesterday we had kind of a nice little pin bar, if you will, and you did have the 200-day average under, but we've broken that now. So I'm looking towards 73.80, and there is a trade idea with Aussie, maybe through Euro Aussie. If you're seeing Euro Aussie kind of or Euro dollar kind of act okay, and here's the Euro Aussie chart. Okay, so here let's go to put on a chart with all the indicators and whatnot on there. But let's look at the daily chart here for Euro Aussie, right? Which you should be pretty familiar with. And we continue to hold up at this long-term median line. Yesterday actually had another divergent reading. Divergence, this was a new close yesterday. Okay, a new low close yesterday, and here we are up 110 pips today. So I do think ultimately that the big breakdown is lower in Euro Aussie, just like I think the big move is eventually higher in the Australian dollar. When it comes to over the next few days, however, 2 equal legs up from this low gets you 45.32. That is right here on the lows right here. So 45.32 on Euro Aussie might be where we're headed. If I go to a short-term chart, you can see the uptrend just from today. And you can put on a fork here. I wouldn't really follow that one necessarily, but I would follow this one, right? And here you can see we median line, pull back, finding support at the 25 line. And here we're just sitting here. So, you know, I think it's okay to look higher in Euro Aussie, and you would actually have the channel resistance area would be up here sometime tomorrow. Looks like it's during Europe, actually. So Euro Aussie. If Aussie is going to get down into 73.80, Euro Aussie might be a decent near-term trade up into 45.30. So there's your Euro Aussie chart, near term, and then looked at the daily just before. Let's look at Kiwi. Kiwi, again, Kiwi here is, if I look at I tweeted out this chart this morning saying that you had some short-term support, and sure enough, we have rebounded off of it. Kiwi, you know, the momentum on the downside is really obviously kind of abated, and on the short term, you could still have a move up into, I know 7150 is the area I've really been talking about. You could still get a move up into 7150, right? You have this rally here, and then this decline really looks like a 3, right? In which case you could go A, B, and then C. So complete a flat up into 7150. Certainly a possibility here for the Kiwi dollar exchange rate. So very short term for a scalper or something, this median line here, really the resistance hasn't been on the median line, it's really been slightly below it, I guess. Yeah. But I'd be looking at, you know, if you can get up back through here, then watch for support on this median line. So there we have Kiwi dollar. What about the daily chart for Kiwi? Oh, that's the hourly chart. The daily chart. So we've broken support. 1, 2, 3, 4, 5, this is 6 days down so far. Again, why do I keep talking about 7150 aside from the fact that you could complete a flat up there? It's the month open, 7148. Okay, and then you've got this parallel here, which was talked about in the the daily updates, the swing updates here recently. Here and here, okay? And 7150 would be up here. This might not last long, this very short-term downtrend. As far as, you know, getting slope, you might actually end up going through this and getting up into 7150 sometime over here. The 7150 is really the spot that I'm watching for. Okay, what about dollar CAD? So right after I don't even know what the inventory numbers were, but dollar CAD ticked up a bit, about 10 points, and then Russia came out and said something with OPEC and absolutely slammed dollar CAD. We were at 34.70 or so right before they said it, and then we just traded down into actually the monthly open, 34.06, and we are kind of trading around that level. But more importantly, we are trading at this big long parallel, as you're quite familiar with. And, you know, look, we've retraced 50% of the decline from January. After last week, we had a weekly close, a pretty strong weekly close, obviously up above the parallel. So I expected if we were to pull back that this is support. All right. To this point, that is still quite possible. You kind of need to hold right here in order for us to still look higher in dollar CAD. You know, I'm kind of uneasy with it because you've come off the 50% retracement, right? And if that doesn't hold, you then have, an opportunity to basically be on the other side. Maybe you get a topping pattern with dollar CAD. You know, it's more trading's already extremely difficult, obviously, but dealing with CAD around these OPEC announcements or whatever you want to call them, or rumor, they're more rumors. Kind of interesting to me that the market still pays attention to it because there have been so many rumors that, you know, have come out and jacked oil, and then they're just not true. Like nothing ever happens. So, you know, perhaps this one will be true. I don't know. It's, you know, but here's oil. Was looking for it to hold here. Obviously, something of a fake out. Would still watch this line here. Okay. So we popped through 50 or 46. Watch for support on this, which is just nearly reached this morning after the inventories number. Red line, excuse me, red line along with some retracement figures will be in line potentially for a pullback in crude. However, we have, if I can find it, this was a free post from back in crude oil, drilled until November. All right, so this chart here, we had the analog stretched out with the 90s to 98 period. Here's what that refresh chart looks like. This week, right now. So, you know, it's maybe crude is about to go bonkers through the roof. Certainly, you do have I think you do have, let's see if I can find the chart. You do have a good set, or a good reason, I should say, to look for that near term. You know, if we go 60-minute chart here, this is certainly an impulse, right? This is certainly an impulsive rally. Okay, you've got this dip, finding support. I continue to look at this as support. This is a possible short-term fork. There's really nothing, there's no reason to look at this point because, I mean, you haven't touched anything on it really, just trading around the median line here. But, you know, if you were to come off a little bit and find support at the 25 line, which is forward about 44 3/4, then sure, you might end up actually having something to work with. This could be the thing that takes you higher. So, you know, given the, I guess, the daily reversal that we had 2 days ago, and the follow through of that daily reversal, kind of the mind that it's worth looking at the long side on dips and crude. I would not chase it here, okay? Because again, you're trading up at near resistance. Possibility that you stretch into this level, but long with stops below here, to me, is just kind of a wasted trade because I think you could certainly see more of a drawn out sideways downside chop. You know, maybe get yourself a little inverse head and shoulders, okay? With, you know, the low back on November 8th, the election. You know, to build a better, you know, low, if you will, and work higher. So that's what I look at with crude. And essentially, I guess I'd kind of look, you know, at dollar CAD in the same way. You know, here's the dollar CAD chart. We go to an hourly chart. Kind of holding up here. You know, again, the month open and everything else. Oh, Horace asking dollar yen. Oh, you betcha. I got dollar yen. I got lots of dollar yen. I'm going to spend probably the next 30 minutes talking about yen crosses. So this would be an area where, again, bigger picture, you've got the big support, of course, and then short term, you've got this. So, you know, you could hold up, and if you get that, you know, that crude oil kind of, you know, bounce chop sideways in a short term correction, maybe dollar CAD gets up into this resistance area. Okay, so this would be something to follow in the near term. What's that high from 2 weeks ago? Maybe 34.64 as resistance. That's the high from, I believe that's the NFP high, actually. No, it's not the NFP high. That was, yes, it is the NFP high. This is the NFP high at 34.64. Okay. So that area might be something to watch for, you know, in line with this, with the trend line. Okay, let's move on. Yen crosses. So I'll start with dollar yen. Canwall also has a question about silver, and I will look at silver here in a minute, but let me get to the yen crosses. Obviously, probably the big story as far as the you know, FX is concerned is what's going on with yen crosses. And you know my thinking on dollar yen, in that I think the next big spot for us to go to is probably the 111 area, 111, 111.40. You draw this trend line parallel. Okay, you can draw it off of here. You could draw it off the August 2015 crash low and cut through here, and it would be a little lower. Draw it off these here. Either way, it's 111, 111.50 is your next big area. But what about from here? Where can you go? Well, this is the top side trend line that was broken, and then it looks like a mirror of, or a mirror. It looks the exact same, I should say, as the U.S. dollar index, as DXY, in the sense that yesterday that was support, right? You can see you broke through it. You came through on Tuesday trade during Asia, found a low of 107.75, and just went immediately higher. So you have had a pullback here of 109.75, currently 109.20. When dollar yen gets moving, in any market for that matter, gets moving in a major trend, you typically aren't going to see very strong, very strong pullbacks. If there is going to be a pullback, your support is this line here. This is the former resistance line. It's a blue line, former uptrend resistance. I don't know if that comes into play anytime soon. It could be something where we trade sideways for a little bit and then it comes into play at a higher level, right? I would just keep this chart on hand. Just because you have a support line doesn't mean the market has to go to it immediately. The market may very well go higher or sideways and then revisit it at a later date. Okay, so with dollar yen, you're looking towards 111, 111.40. 111.44 is the May 30th high. That's why I'm saying 111.40. 111, you've got lows back here from February. Okay, so that's the attraction point. Near term on dollar yen, you might look for support at this line, which is a little closer. You can see this one. Make it blue as well. You can see the cut through these levels here. Okay, the big tail is the resistance here, the resistance here. Had minor resistance. This is the same chart that was in the update from about 2 days ago. You had minor resistance here, okay, on Tuesday, I guess Tuesday night or Sunday night, excuse me, I believe. So that, if you were to pull back, would put you right at the high from Monday, 14th, yeah, Monday's the 14th, which would be about 108.54, okay? So 108.54 would be kind of your next, spot to maybe pick up a dip, if you will. Where does this go? Where does this invalidate, right? Well, I'd say back below the trend line. So, back below the blue line, right? The low for the week so far, you can see here is 106.70. This is the gap open, shot higher out of the gate. So 106.70 would have to be a stop, kind of an emergency stop. But if you were to get back below here before that was hit, it would be over, as far as I'm concerned. So pay attention to 108.54, and then I can't think, 111, 111.40 for dollar yen. What about other yen crosses? Well, euro yen, here's our euro yen chart. We had the breakout behavior change here on the 10th. So last Thursday, We have held up and followed through on that behavior change, or held that behavior change, if that, you wanted to call it that, which is a good sign. And we're getting a bit of a pause here. 117.50. I put out the short-term chart this morning on Twitter. Essentially, I'm looking for us to hold support pretty close to here. Looking at this. And again, you might say, like, why would you draw that? You got to remember, this whole area, this was the election, right? I mean, there was not, it's, for all intents and purposes, you really can kind of ignore that, right? You don't really want to draw trend lines off of that. I mean, this is an emotional spike. You really didn't spend much time down there. If you're looking at a daily chart, for example, in the S&P, right, with regular trading hour without overnight hours, you wouldn't see anything like this anyway. You wouldn't even know that you traded down here, right? You would just think that you gapped up here. So, there's good behavior on this, right? You can see that where the top is today, where I tweeted out, I think you could get a pullback here because you're at this level. So obviously the market has, is listening or is following, this slope on the short-term chart. And I would want to see us hold support pretty soon in order to, stay very constructive on euro yen. Okay, you've got former highs 1636, 1630. Okay, so that's about as low as I would give it. Median line here, which hasn't necessarily been support or resistance throughout, but it could be. I mean, we did really explode through it, right? On the 15th yesterday. So you could get support at this median line, okay, which is, again, very close. It's about 1650. In fact, it looks like it's at this high here. What's that high? It's the high from the 10th. So last Thursday's high, 1657. So I'd be looking at that to provide support if indeed we're going to make it up to 120 or so. Now, the first big test for this is going to be 1845, 1850. You got the highs here from July. You've also got the 200-day average up here. Okay, closer to 119, but in a couple days' time, we might be, 200-day average might be a little lower. So I'm still constructive on, on euro yen. And 1550, that's the low for Monday. That's really the invalidation level as far as I'm concerned with euro yen. Pound yen. This is one that I think you might actually see a pause. The chart going into, you can see you're getting yourself a little bit of a doji here. The day's not over, of course, but we are respecting this resistance, so might as well, keep it on the radar. Pound yen, you could get a pullback here. If you get a really strong pullback, then I'm guessing euro yen probably ends up failing. But this is a trade that if we end the day like this, I think would actually be worth maybe doing something or putting in an idea, putting in an order or something. So pound yen is trading into good resistance. Again, it's really the same method of kind of identifying resistance as we did with pound dollar, right? You're looking at kind of an original, if you will, trend line, and that original trend line really does end up providing pivots down the road. So here we are, you get the horizontal stuff up here too. You've got these highs back here. You spiked into 36.60 today. High so far is 36.76. So we have spiked into that. Got 37 high, a little, a bit higher. Wouldn't want to see us all the way up there, I guess, because you would essentially have broken this level. So pound yen could be, a candidate for the short side here after the day is over. Again, like to wait for the day to close rather than just jump in midday, put yourself at risk of, something of a spike. I mean, if we were to turn around and close up here, you wouldn't probably want to be short. Okay. Don't worry about missing out on, the beginning of the trade. The market ends up closing down here. Great. You can put an order up here with a stop up above here and, no harm, no foul. What about some other yen crosses? Let's look at Aussie yen, which is one that we have looked at a bit in recent, really recent months, but especially in recent weeks, we have looked at Aussie yen some. Okay, Aussie yen. So Aussie yen's broken out. Again, broke out. This was election, okay? And if Aussie, if Aussie's one that, if it still has some downside to it, again, that 73.80 is a biggie. You could get down to 79.70. I mean, that would be the retest area. I'd be looking for support. The first support I'd be is 80.65, which would be right here. It's the high from 11.1. Okay, as it is right now, you are holding up here at 81.50. Eileen has a question. What times of day do you usually like to trade? Well, I'll put on orders again after the day is over, and if they trigger, they trigger, whatever. So it doesn't really matter to me. But if I do some scalping stuff, short term, like when I send out charts to you, on Twitter, I might do, some short term trades here and there for 10, 20 pips or something, and that's going to be, pretty much during the overlap. I mean, between Europe and the U.S. So that's just because that's when things are most active. There's really nothing worse, in my opinion, than getting into a trade and it doesn't go anywhere, and that's kind of what you get a lot of times in Asia, although not all the time. As well as, of course, this time of day. So, Asia, not a real big fan of trading anything short term on Asia. Thank you, Eileen. Also, not a big fan of trading, this kind of this time right here. This after the U.S. session is, or after London's closed, excuse me, and all you have is the U.S. session. Not a big fan of that. There are exceptions, of course. I mean, sometimes you get, during like crisis period, big risk off periods, you can get, instances in which you have the stock market and yen cross is really volatile throughout the day and into the end of the day, and that's a little different. Aussie yen, though, this is a trade that I'll be looking at. See if we can find a short-term upslope to work with here as well. The trend line, what would this look like? Okay, so you might want to look at something like that. And that looks pretty good, doesn't it? So Aussie yen might be a candidate to buy weakness into this trend line. So here's the daily chart, and essentially, if you get a quick dumping tomorrow, you could get down into tomorrow or the next day. You could get down into 80.70 or so, 80.80, before going higher again in Aussie yen. And that fits pretty well with the euro. Yes, we do, Nicholas. So let's see here. You want to go to go to the bottom of the page and go to trades, and then you can go to the trade histories right here. Okay, you'll be able to see it right there. All right. So yeah, Aussie yen. I think the big opportunities here are going to be in yen crosses. And still, even though we've moved a very far amount in a short amount of time, these trends can get pretty stretched and violent. And I wouldn't necessarily call this stretched yet. In fact, this is the thing I put up yesterday. Aussie cross or dollar yen crossing above 75 on RSI. And if you just look at it, like, well, yeah, there's tops when the market's at at 75. Yeah, there's some, but there's a lot of times when the market actually is much closer to basically the middle of the trend or even the beginning of it. Look, I don't pretend that the market doesn't pull back or whatever, but you have to be prepared mentally in order to buy those pullbacks if you're in a trend. And in this case, so this is a strategy. I wouldn't really call it strategy. It's a rule that says if dollar yen goes above 75 on RSI, then just buy it and close it after X amount of days. And so if we close it after 1 day, you can see that this is over 10 years. I run over 10 years because if you go back and like you use back in the 80s and whatnot, the trends, it's overwhelmingly positive, right? So I want to do it in a more similar period, like the last 10 years. But if you go back to the long, it's even more positive. It's crazy. But essentially, you've got 24 instances where that happened, total trades, 24 times you crossed above 75 on RSI. Okay, 11 of the trades are winning after 1 day, 13 are losing. Okay, average profit or average move would be, this is in, I'm going to change this. This is in yen, and I'm not going to be able to understand that. Let's change it to dollar. Okay. Okay, here we go. Average 18 pips, okay. After 2 days, it gets more positive, right? As you go further out in time, it gets more positive. In fact, the most positive expectation is 20 days out, right? And the further you get out, as you can see, the further you get out, the less total trades or instances there will be because crossing above 75 likely happens multiple times. But in this case, you would have 13 instances, 77% profitable, 10 out of 13. All right. Now, the times when it's not, market basically falls apart. So, the expectation is that the momentum continues, is what that test is telling you. And that's where the charts come in, right? That's where things like this come in. When, you don't just want to buy and say, man, I hope this works. You've got areas that you're looking for support. So in this case, 108.54. If you get a deep pullback, then yeah, maybe you get down to the 107.80 area, right? All right. What about CAD yen? Given what's going on with crude and potentially having, a much bigger turn going on, and with dollar CAD, basically, dollar CAD came into the month. Here we are below it. Okay. If my thinking was that if we were going higher in dollar CAD, we were going to come into 34.20, and then we were going to rip. It hasn't really happened, right? We came into 34.20 last night during Asia. We ripped, stopped at the week open, which is 135, pretty much on the nose, and here we're falling apart. So be open to being a dollar CAD bear or a CAD bull, as it were. And if we look at then CAD yen, your next level from a slope perspective looks like about 83. Head and shoulders low, head and shoulders here, excuse me. Again, you can't really pay attention to this election thing. Okay, this is a shoulder, this is a head, this is shoulder. All right, so this gives you something to look at. Median line was resistance back here. It was in May. Lines up with the high here from September. I don't know what I have this level as, but lines up with the high in September. So if you get something of a pullback, and I don't know if it'll be CAD induced or yen induced or if it'll happen at all, but if you were to get something like that, you would have an opportunity to buy a dip and target initially 83. Okay. You can see the area that we've come into here, 8160. That is the low from April 7th. So you, again, be wary of maybe seeing a pullback here in CAD yen. It seems like the kind of the case with most yen crosses. And by pullback, I mean like lasting, you know, some consolidation that lasts a couple days. I'm not saying it's going to go down 500 pips. Really, for me, it's all about the really all about this dollar yen chart. I mean, just look for that old resistance area, whether it's this one or this one, you know, to be support. Okay. Okay, so Canwall, who has waited so patiently, is now going to get a look at silver. So let's do that. Okay, silver, silver, silver. Canwall, if you are trading the metals, obviously, pay attention to this dollar index chart, okay? Because what I'm about to tell you on silver, I think will actually help with this dollar index chart. So if you get a pullback here in the dollar, and you see the dollar trading on this level, which was resistance and then support just yesterday, it may be that this ends up providing resistance in silver. So first of all, here's gold. Gold, I see this as, you know, some consolidation, maybe heading down to 1200 before it's all said and done. Resistance would be about 1240. Silver, here's your log chart of silver. You can see that we have bounced, and what this is, these are extensions of the parallels, okay? So this is your fork. You traded outside of it, obviously, but if you took, you know, basically a quarter of the fork and extended it, you get resistance. We've done that here and gotten support. So silver, I would look for resistance up here near 17.7, you know, 17.67, 17.68. So just like the dollar index, I'd be looking for that recent resistance line to end up providing support. I would look for this to end up providing resistance near about 1770. Okay, that would be silver. So I do think we bounce here. I do think we find resistance here. That's all I can give you on silver at this point. This is log chart. Not sure if this ends up holding, obviously. This red line, which is drawn off closes, that ultimately could be the final support for silver. I want to be really bullish silver from a trading standpoint. However, I'm bullish here, but I'd be taking it off the table here. Okay, so that's 1770 or so, and that is what I think about silver at this point. Moving along, Aussie Kiwi. Matthew, good call, my friend. Let's take a look at Aussie Kiwi. So I think I put in the update the other day like 104.80, 105 is for the potential for maybe an Aussie Kiwi final low. And here we go. Okay. So we are getting that pullback. We had the wave count. Really, lined up. The 1, 2, right? We had a 5-wave A, B, 1, 2, 3, 4, 5, C, 1, 2, 3, 4, 5. So we're looking for the pullback in wave in 3 waves here. And if we go 61.8 on that, it looks like it gets us 104.73. And then if you recall, the daily reversal support for this is 104.83. So that does look to me like it's 104, 70, 104.80. Looks like it would be the sweet spot to get a purchase on Aussie Kiwi. I do believe there is Aussie employment tonight. So 6:30 or 7:30, we're in New York. I'm an hour in front of that right now. So you do have Aussie employment tonight. So watch for some of these Aussie crosses, right? Like watch 104.70, 104.80. Euro Aussie, we just kind of mentioned earlier in the webinar. But really, the big area, of course, right, is 73.80 for Aussie dollar. Okay, just big spot. I mean, you can see it so well on the weekly chart. Aussie dollar. Here we go. Okay, Aussie dollar weekly chart. 618 of the rally from bet down here. Excuse me, 73.89. October, December 2015 high is 73.84. 55-week average is 74, but again, in the area. Really where I would pay close attention, right? Tonight. Last week's low is 75.25. That might be resistance tonight too. We have dollar yen. This is when you get these trends that seemingly just don't really pull back. I mean, look, eventually you're going to get, pullback. Even you can look at the strongest trends ever. You'll have even a couple hundred pips on the downside. But you can see these little blue dots here. All this means, this is like kind of an RSI little system that I work with, and you've got RSI. When RSI dips to a new 24-hour low, and price is above its 24-hour low, that's when you get a blue dot. All right, so it'll get murdered in sideways markets, but during trends, strong trends, it does very well. Could do the same thing, obviously, on any time frame, but say on a 4-hour time frame. On a 4-hour time frame, we haven't even gotten a buy yet. That would be the one that I'd be looking for. Is if we got a pullback and got the buy in the 4-hour time frame. So in order to do that, what you would need at this point would be a drop in RSI probably below, well, it'd have to be below 60. So if you got an RSI drop down here and price obviously we're above its 5-day high, which is a 30 period on a 4-hour chart, you would get the buy signal. The 4-hour signal is really the one that I would pay the most attention to. I will show you, for example, the strong trends when you get these things. Yeah, this is, you don't have it for market scope. It's just something that I've coded, and I've been experimenting with having, offering it out, but haven't done so yet, obviously. So let's see. Let's go back to the very strong trends back in the euro. So this was the top back in May, okay? You can see all the 4-hour sell signals, okay? All the 4-hour sell signals is when you get RSI to essentially make a 5-day high and price does not. Now, really what you're looking at here is kind of an automated version of RSI and the range rules that we talk about. Sometimes I talk about them, Mike talks about them, and you get a deep oversold or overbought region. If you have a deep let's look at it with yen because it's much more applicable right now. But you have a deep, heavily overbought so-called market. And, oh crap, hold on. All right, so you have a heavily overbought market, which means RSI is basically above 75 or 80 or something. That actually is, from an opportunity standpoint, I take it as a signal that's actually bullish. So if you get a very oversold level, I take it as an opportunity that's actually bearish, not right away, but on whatever counter move you get next. Right? Trends are made by very extreme, kind of announcements, and in this case, a very extreme announcement. On the daily chart, we have it now, so it's even bigger. But the next pullback, you'd be looking for RSI to essentially find, support in, the 40 to 50 region, maybe even 60. The point being that if you get a new 5-day low in RSI in the 4-hour chart, see what price has done. Is price pulled back shallow? Is it more of because the market moves sideways? And is then you want to go, buy that dip. Okay. So Horace question here. I see there's some interest as far as how to get the tools. Yeah, well, it's something that I need to put together as a package. And if I got it together, I'd make it available, obviously, to members. But at this point, I don't have anything set up like that yet. Also, something I'd maybe like to test it and refine it a little bit more, and really kind of have it as kind of a standalone, maybe a system or something. But yeah, it's a work in progress. At this point, it's really just a rule. It's not necessarily a system. So it's a rule that can be used, by someone that's knows how to use it, basically. So That's about it. But yeah, something I'll definitely be putting together. Let's consider it a project for, you know, early next year. Let's do that. All right. Okay, so that's it. That flew by. Is already an hour. That's what happens when you've got a lot to talk about. So thanks all for attending the webinar. And I will get this archived and get this out ASAP. And everyone have a super duper rest of your week. Talk to you on Twitter. All right, take care. Bye.